So oil prices rose today due to increased geopolitical risk at the U.S. Coast Guard, reportedly now in active pursuit of a third vessel in international waters near Venezuela. And of course, it follows a recent seizure of two sanctioned oil tankers by the U.S. Let's go to Vikas Dwivedi. He's a strategist at Macquarie Group and joins us now to talk some more about this. Thanks for your time.
All right, thanks.
Why are the tanker seizures not impacting crude prices as much?
The market is not viewing this yet as nearly a big of an issue or a risk to supply as, say, the Iran-Israel and definitely the Russia-Ukraine situations. And the reason is it's just a much smaller amount of oil that would be at risk under any scenario.
Okay, so China primarily buys some of this oil, is what I understand. How much do they rely on it?
Yeah, so look, Venezuela exports roughly 700,000 barrels a day, and China is about half of that, call it 350,000 barrels a day. China imports about 12 million, right? So, it's a small amount, but it's an important part of a, arrangement between China and Venezuela. So it's something we don't think the Chinese particularly are interested in seeing get disrupted, even though it's not a big part of their crude import picture.
Who else relies on Venezuelan oil?
Yeah, so if you say China is roughly 50%, the U.S. Is about 20% of the exports that Venezuela puts out into the global market. And then after that, there used to be in the Mediterranean and Spain in particular was a big buyer, but almost everybody else that was a big buyer is down now. And the rest of the other 30% that's not China and that's not the U.S. is just scattered around the world.
Is there precedent for what the U.S. is doing now with the seizures?
Are you saying, is this potentially a precedent?
No, I'm wondering if there is precedent for what they've done. Is there a legal precedent for the action they're taking?
I don't believe there has been of this particular variety. And certainly we've sanctioned vessels, we've sanctioned countries, and potentially using secondary sanctions buyers. But going after the, like a sanctioned vessel directly, certainly in my experience, we've not seen that.
Okay. Let's take a look down the road, because clearly, as you mentioned, it's not having a great impact so far. That could change if Venezuelan oil exports start coming into North America. We don't know what the long game is here. How could that affect both shale producers in the U.S. and then oil producers in Canada?
Great question. Look, in the long game, there's a couple of scenarios, right? One is everything sort of heats up for a few weeks, a few months, and then it kind of goes back to normal. There is no regime change, and there's no big overall change in the dynamic of Venezuelan oil, as well as their oil industry. So the export don't change, and the overall industry doesn't change. In that situation, you kind of are back to where we started. In another scenario, though, where there is something more dramatic, let's say it's regime change or something that restructures their industry. Venezuela, it wasn't that long ago, about 10 years ago, they were exporting over 2 million barrels a day, almost 3 times what they do today. And if they ever got back there, and they could, it's the most, like really the largest oil reserves in the world, and they can get there with a restructuring of their industry. So if they got back to 2 million plus versus 700-ish right now, that would be a massive change to the global market. It would be a much bigger direct competitor, to your point, to Canadian crude. It wouldn't do a lot to shale. It's a different grade of crude, right? Shale is a light sweet crude. This is very heavy sour. But it would affect other heavy crude producers around the world, especially the other parts of OPEC.
So, Vikas, what's your oil outlook at this point? Because you have the situation with Venezuela, which is clearly not resolved. And as we mentioned, we don't know what the end game is here. What is your outlook for oil for 2026?
Yeah, we're still expecting a very large oversupply in the first half of the year. And we are still expecting a pretty large pullback in oil price, going through the first quarter of 2026 and into the second quarter. So, we can see the price going for Brent crude into the low 50s, maybe even below that, towards 45. Probably can't stay there too long because a lot of things that led to the oversupply will fix themselves if the price goes into that low 50s, mid 40s range. And so we're expecting, kind of a average for the year that's in the high 50 Brent. So not a big delta from today, but the path we think could be kind of wild, and wild meaning more downside before we rally back up.
And I should ask, does that include Russia, some sort of, agreement where Russian oil gets on the market in a legal way?
Yeah, we're not counting on that. We have cuts from the recent Russian production and export levels for the most of 2026. So we really are not counting on any big change upward in Russian supply to the market. To your point, there's a lot of peace efforts that are kind of rolling out and some progress being made. But we think by the time the oil is really able to come back in size from Russia, it'll be most of 2026 will probably come and gone.